Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and I'm starting off with a daily candle chart of the Russell 2000 ETF, ticker symbol IWM. And for those of you who've been following along, you know that I leave my lines on the chart from previous forecasts so you can see how that worked out. You see, 3 weeks ago, we put this in a downward direction to fill the gap down here. After that, we said upward move. Last week was Friday, right here. See this green candle? And I said we would most likely move up to test resistance because that was a bullish Harami candle. It's right in line with a bullish engulfing. You can see back here was a bullish Harami as well. And what happened? Well, after the bullish Harami, we went right up to test that resistance as I said it would, and then we pivoted lower. I did not extend my forecast very far. I just said that we would most likely pull back from that resistance. Now, what does this mean for next week? Well, obviously you can see that the IWM is moving below the 20-period moving average, and we're doing so on higher volume. So next week, I think on Monday, as investors and traders digest the news of the Fed over the weekend, we will most likely see a slight continuation of this downward pressure. But I think by Tuesday, possibly Wednesday, we will start to rally. Again, we have a wide divergence from this moving average here. So if we drop on Monday, that divergence is going to get even wider. And then I think we're going to test that 20-period moving average. We'll have to see whether or not we can get back up above the moving average. If not, the moving average turns to resistance. Now, let's take a look at the diamonds. It's ticker symbol DIA. It's the Dow Jones Industrial Average ETF, where I extended my downward forecast. You can see right here, this is what I forecast over the last 2 weeks. 2 weeks ago, I said we would move up, test this resistance. We did that, pulled back. Look at that bearish engulfing candle right there. Well, as a result of that bearish engulfing candle, we now have 10 straight red candles in a row. Hit my target yesterday right there at 337.89. For those of you who are tracking the target prices, that was it from last Friday. And we gapped down. Now, I'm going to erase all these lines now that we've hit the target prices, and I'm going to add a 50-period moving average onto this because the market has now broken out below that 50-period moving average, and that's that red line. Now, this is a critical move here with the sellers taking full control. You can see that the volume is increasing on the way down. That's bearish. But notice what's happening with this 20-period moving average now that the price is drawn below it. This 20-period moving average is starting to converge on the red line, which is the 50-period moving average. Once this moving average crosses, that is a huge sell signal for a lot of the swing traders who will not only get out of any long positions, but they'll start to reverse, go short. Option traders will start to buy puts, put spreads, diagonal spreads and such. So on Monday, I think we're going to see a drop in volume, believe it or not. And as a result of the drop in volume, I think the buyers will try to find some level of support, and you'll have those bottom fishers out there. I think we're going to go a little bit lower, but here's my forecast, and I'm even going to go 2 weeks out on this one. I think the gap will fill. I also think that the price will move up to 340.71, at which time the 50-day and the 20-day moving averages will act as resistance. That's critical that you understand the role reversal behind here, because right here you can see how the 50-period moving average was acting as support. Now that we're below that level, the moving average is now going to act as resistance. So for those of you who are more or less steadfast in your long-term buy and hold, this is where the market, I believe, will give you another chance to get out, move to cash. If not, then I think you could most likely see a pullback from there as the role reversal takes hold. So that's my forecast for the diamonds. Now again, I'm going to leave this line in place. It's a 2-week forecast. You can see right there again, to reiterate, that target is 340.71. After we pull back a little bit, the gap will fill. These oscillators will start to move up. You'll see the CCI down here will start to move up. And while there might be a short-term buy opportunity on a bounce, I certainly don't think that would be a good idea to hold on to those long positions. So that's the diamonds. Now, if we take a look at the Qs, ticker symbol QQQ, you'll see that we bumped our heads against resistance, just like I said we would, and we pulled back just like I said we would. We didn't hit the target yet, but look what's happening right here. Let me magnify that for you. That little red candle found within the body of the green candle is a bearish harami. We can see one here as well. And bearish haramis, like bearish engulfing candles like we see back here, are the most bearish candles that you're going to find, and they're equally bearish. The bearish haramis and the bearish engulfing are equally at the top of the list for most bearish, and therefore I think we're going to pull back. Now I'm going to erase all these lines, redraw the forecast, and then I'm going to show you some more signs that I'm seeing. Again, I think we're going to pull back on Monday, pull back most likely below that 20-period moving average. And you can see here the stochastics has crossed with a sell signal. You see the CCI there crossing below that red line, which is the plus 100 mark. That too is a sell signal. So for the Qs, I'm putting a downside price target of 335.75, most likely by the end of next week. So that's for the Qs. Taking a look at IWM, guess what? We went right up to test resistance like I said we would. Remember, this was Friday. We had a bullish harami, went right up and then pivoted lower, just like I said it would. And now we are faced with an oversold condition on IWM. And like the Dow, we see the volume increasing on the way down. So on Monday, I think we're going to see a slight downward pullback, a little bit more than where we are now. And then once the volume drops, I think we're going to move right back up to test this 20-period moving average. Now again, once the moving average is broken on the downside, it then becomes resistance. So as this curves over, as it rolls over like this, we'll most likely see the price bump its head against that resistance there. So keep an eye on that, because if you are long and you're not out, keep an eye, because if we fail to get back on trend or back up over that moving average, that will shift the tide, and you'll see traders selling now into the rallies instead of trying to buy the dips. So that's IWM. Now if we look at the spiders, ticker symbol SPY, this is the S&P 500 ETF. Again, targets were hit. It's almost as if the market was following this line. Of course, we know that's not the case, but here was Friday, and we had this hanging man. I said that we'd most likely go down. On Wednesday, we hit the target right there, which I announced last week at 421.08. We hit that target and then continued lower with another gap down. Now, I'm going to erase all these lines, but redraw a very important line down below, and that is the gap fill level right there. I do believe that we will make a move to fill the gap, but I don't think we're going to make it right away. I think we're going to come a little bit lower on Monday. We will most likely see a drop in volume. I'll just draw that little bar there so you can see how that works out. And the oscillators will most likely go a little bit lower before pivoting up, at which point I think it will attract some buyers. You can see that the CCI is extremely oversold here. I think we'll get a pivot up there as well, with the possibility of filling that gap and retesting this moving average, which will most likely act as a resistance line. So I'm going to draw that right out like that. It's going to be a little bit more than a week forecast. We'll see how that works out. Now, as the S&P was dropping, the VIX was rallying, because for the most part they're inversely related. And I left a long-term forecast on here. If you remember from last week, I had a line similar to this running parallel. I moved it on over, said we would bounce off the support. We did that. Now notice, as I zoom in a little bit more, this is a bullish engulfing candle. So on Monday, we might start off in the red for the VIX, but I think ultimately it's going to wind up here at around 22 to 23. I'll put an exact price target on that at 22.18. And again, as the VIX looks more bullish, the general markets start to become more bearish because a lot of traders are following the VIX as a leading indicator, and it's something that I think every trader should have at least on their watch list. Keep an eye on that. So that is my forecast for the VIX. I'm just keeping that in place, not making any changes. Again, my target on the VIX is 22.18, at which point we'll see some resistance up here and possibly a pullback to the moving average. But I'm not going to get ahead of myself on that. We'll just leave that in place and see how it plays out. Now, if you like to follow along with me on Twitter, just go to the Option Oracle right there. You can find me. I'm very public. You can comment on some of the posts. I do post the weekly market report on here each and every week. You could add your comments. You could share from here. Pete and John are also posting. I do a lot of retweeting for John and Pete as they put out their option information, especially unusual option activity. And you'll be able to also catch John on the live stream at 3 at 3. It's a very popular program that he puts out very quickly, very short, gives you a spin on the market, and you can go from there. So thank you so much for following. Please like and share. That really helps with the algorithm, helps get the audience out there following, and that really helps everyone as a result, because if you're following a bullish candle as well as 5,000 other people following a bullish candle, chances are we're going to make more money that way. So have a great weekend. We'll talk to you soon. So long.